How's it going, everybody? This is Jose from the Stock Market 101 channel, and I hope you guys are having an amazing day. And as always, if you guys haven't checked out my latest videos, I suggest you go check them out real quick. But other than that, let's get right into it. Alright, so here we are, and we're looking right at Apple. And as you see, Apple did have their earnings report, I think, yesterday after hours. And by the looks of things, the market did not take it well, as it dropped from 222 down to 206. So let's see how Apple did in their earnings. It looks like Apple's earnings dragged tech stocks down after hours, just as stocks began to turn around from their worst month since the 2008 recession. Jesus Christ. Apple dragged down the Nasdaq after hours as it reported light guidance for its next quarter and notified investors it would stop offering unit sales figures for iPhones and other products. Wow, that's crazy. So they're not going to be showing how many iPhones they sell. I think that was like a big thing that investors were looking at for each earnings report, how many iPhone sales they were selling every quarter or year over year. Although it beat analyst expectations on revenue and earnings per share, Apple missed estimates for iPhone sales, reporting 46.89 million compared to analyst predictions of 47.5 million, according to FactSet and StreetAccount. So that was a slight miss. 46 million iPhone sales compared to 47.5, and Apple projected 89 billion to 93 billion revenue for its first quarter, just shy of analyst estimates of 93.02 billion. So looks like they're just gonna slightly miss it. They're just gonna slightly miss that analyst estimates by 0.02 on the high end. That's probably why investors didn't think Apple had a really good report, just because they didn't sell as many iPhones as was what analysts were estimating, and also that the guidance is going to be a little lower than what they were estimating as well. And another thing that's very important is that they won't be offering the unit sale figures for iPhones and their other products. That's pretty big. And let's look at that next article. So Apple's decision to stop breaking down unit sales of iPhone and iPads is a defining moment. Apple's decision to make major changes to its reporting structure from the next quarter and stop reporting the breakdown on unit sales is a defining moment in the company's history, according to an analyst. The iPhone maker is making transitions from being a big hardware player to a service business, and it is going to take some time for investors to get on board with the idea of the company expanding more into its service businesses. And that's true, because usually when it comes to Apple, it's usually about the unit sales. How many phones can they sell? That's like one of the big things everyone looks at when it comes to Apple. How many products they're selling? How much are they increasing the unit sales quarter over quarter and year over year? And with that number, we really can't tell if they're increasing the number of units they're selling. And it seems that with them getting those numbers out of the way, they're really focusing on the other things, such as right here it says they're starting to talk more about Apple Pay and iTunes on the software side of and their service side of the business, because that's pretty much a huge business on their own, and they're probably just trying to focus on that more. There's still a lot of people that are buying the iPhones every year, but as time goes on, there has to be huge upgrades for people to really switch on to the next one instead of getting a new phone every year, because most people can't afford it, especially since these phones are starting to get into the four-figure range, which is pretty expensive. And as time goes on, I believe that the iPhone's going to get more and more expensive, so people are really not going to be getting a phone every single year if the upgrade isn't there. Like, you're gonna have to be like this new revolutionary thing in the phone for people to really get it. Most people are probably gonna get the next iPhone when the 5G comes out. That's gonna be the next, the next super cycle that everyone just buys a new iPhone, because the 5G is gonna be like the next revolutionary thing in the phone, and that's what's gonna drive iPhone sales back up. And the next thing right here is Warren Buffett loses nearly $4 billion in a single day on his Apple stake. I don't think he actually loses anything. I think he's just down $4 billion in his position. That's still down a lot. Imagine being down $4 billion. It's crazy. The Oracle of Omaha owned more than 250 million shares. of the Cupertino, California based company, as reported in Berkshire's latest holding filings at the Security and Exchange Commission. And Berkshire Hathaway is the second largest holder of Apple shares, with a stake about worth more than $52 billion, according to FactSet. Despite Wall Street's concerns surrounding the iPhone maker's device sales, Buffett has often explained that his love for Apple stems less from short-term financial performance and more from the power of its brand and ecosystem. "I do not focus on the sales in the next quarter or the next year," he said in August. "I focus on the hundreds of millions of people who practically live their lives by it being the iPhone." He also called the iPhone enormously underpriced, saying that it's worth far more than 1,000 Apple charges for its latest models. I mean, you could probably say that iPhone is cheap, but I mean, it's starting to get more expensive every year, so it'll probably get over that $1,000 average price in the next coming years. And let's see, the last article that we have here is Apple target cut at Morgan Stanley, BMO. Seems like analysts at Morgan Stanley and BMO Capital Markets cut their price targets after the latest number hit. Morgan Stanley's Katie Huberty reduced her target from $226 from $247, and this is basically because of the disappointing forecast for the holiday period, and also announced that it would no longer be providing unit sale figures as of its next report. Just some bad news overall for Apple, even though there wasn't really that much that was being said that was negative in its earnings, other than Apple not making as much revenue, probably because they're sandbagging. Maybe they'll surprise everyone and beat this, which probably they will, and that they slightly miss on how many units they sold and what the analysts were expecting them to sell, and that was a slight miss right there. But those are the two negatives, and that drove the stock down. I believe that this stock was probably trading under the $1 trillion market cap today during the trading hours. And yeah, that's just, we're gonna have to see how Apple performs in the next week, and if it can continue to keep dropping. If it continues to drop, it's gonna obviously drop the market as well, because Apple has such a big market cap, it affects every single thing. Also, let me know down in the comments if you are purchasing some Apple shares, because I think it's like almost a 10% drop, and way more of a drop from its all-time highs of $230 or $232 or something like that. Yeah, and let me know down in the comments if you are purchasing some, because this is way more than a 10% drop from its all-time highs. And that's the end of the video, guys. Please drop a like, subscribe, turn post notifications on, and I'll see you guys in the next one.